We're back. Now, one of the biggest forces shaping markets right now isn't coming from the crypto industry at all. It's coming from global geopolitics. Over the past several weeks, rising tensions in the Middle East, particularly surrounding Iran, Israel, and the critical shipping lanes of the Strait of Hormuz, have kept energy markets and global investors on edge. The Strait of Hormuz is one of the most strategically important oil routes in the world, with a significant portion of global petroleum supply passing through it. So, whenever tensions flare in that region, markets tend to react very quickly. And that reaction has already been visible in the energy markets. Oil prices have experienced bouts of volatility as traders attempt to price in the possibility of supply disruptions or escalation. But what's interesting this time is how Bitcoin has behaved during the uncertainty. Instead of falling alongside other risk assets, Bitcoin has actually shown relative strength compared to equities and traditional markets. In fact, during several periods of heightened geopolitical tension over the past 2 weeks, BTC managed to hold its ground, and in some cases even move higher. That's something analysts have been paying close attention to. So who is watching this dynamic? Primarily macro investors, energy traders, and institutional asset managers, all trying to understand how Bitcoin fits into the broader global financial landscape. And increasingly, some investors appear to be viewing BTC less as a speculative asset and more as a non-sovereign store of value. In other words, something similar to digital gold. The idea being that during periods of geopolitical uncertainty, investors may look for assets that exist outside traditional financial systems or national currencies. Bitcoin fits that description quite well. Now, looking ahead, the next move will likely depend on how the geopolitical situation develops. If tensions begin to de-escalate, or if diplomatic efforts successfully stabilize the region, we could see broader risk assets rally, which might push Bitcoin toward the $75,000 to $80,000 range. But if the conflict drags on or intensifies, markets could remain volatile, and Bitcoin may continue attracting attention as an alternative safe haven asset. Either way, the past few weeks have shown something interesting. In times of global uncertainty, Bitcoin is increasingly being tested as a macro asset. And while geopolitics may be shaping the macro backdrop, another important factor influencing the crypto market right now is regulation. Because behind the scenes, policymakers in Washington are beginning to move forward on something the industry has been waiting for: clearer rules for crypto. New proposals involving the SEC, the CFTC, and Congress are starting to outline how digital assets could be regulated in the United States. And depending on how those frameworks develop, they could have a major impact on institutional adoption in the years ahead.